Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on D Street. Last half an hour remaining. It's been a day when we have seen sharp losses on the D Street. But as we move in closer to the closing of the session today, we have recovered quite a bit from the day's lowest point as well. If you look at the Nifty now, we are back above the 24,000 mark and hovering about 180 points lower at 24,066 odd levels. Even though sectorally the action still remains intact, only the IT sector still is holding on to the gains. Rest of the pockets are still lower in trade, but the quantum of losses have reduced on some of the sectors like FMCG, banks, etc. Let's look at the top movers on the Nifty. You have SBI Life that is consistently holding on to its top spot throughout the course of the day today, 5.5% up now. TCS, Tech Mahindra, Infosys from the IT pack are supporting, and Ultratech Cement is also now come into the gaining space. Reliance Industries once again is pulling up from the day's low point, is up by about 0.12% higher in trade. What's not doing well? Adani stocks, Adani Ports and Adani Enterprises are the top laggards on Nifty. Axis Bank post earnings. You also have Trent, Shriram Finance and Bajaj Finserv as some of the other pockets that are still lower in trade. PSU stocks are also down in trade. The index is down by 2.5%. Stocks like Coal India, NTPC, HPCL, all of them are actually struggling in trade. Let's welcome our guest on board. We have Kush Godasara, who's the market expert, who's joining in on the program with us. Hi Kush, good afternoon. Welcome to you and thank you so much for taking the time out. I wanted to just get a sense on the markets first with you because, we have seen that recovery of 6-7 days odd. Things were looking much better on a trade tariff talk front. Globally, things were improving. Globally, market sentiment was improving. And then comes this geopolitical tension that is now closer home between India and Pakistan that is now further dampened the sentiment. What do you anticipate now for a retail investor who is just starting to pencil in a recovery in the markets? How should one really react to what's happening now?
Good afternoon, and thank you for having me on the show. Definitely, things were looking good until today morning, and the way we had opened up, yes, Bank Nifty was weak because of Axis Bank, but Nifty was making new highs. But I've two things, which concerns me now are, we are back below 200-day average, which was around 24080, so around 24,100. Secondly, geopolitical tensions at home. And third, of course, if you look at DII figures, they are not buying uh, since last 3 days. So definitely now things look a little bit weak, not maybe negative, but yes, definitely we may see time-wise correction. So as a retail trader, one must book profits and just enjoy the weekend.
Okay. Kush, just for average retail investors to really know, should one be really using this kind of a bounce that we see on the markets to exit? Or do you think this is a time to buy? What would you say? There is a lot of confusion among investors. Some who think that, things could get worse from here. So should they use the bounces to in fact lighten their positions in the market, or those long-term investors could actually see this as a great opportunity to enter?
So, for long-term investment, I think this is not the right time to enter because we have seen a rally from 21,700 to 24,200 almost. So, if you look at, 15% rally in last 2 days, 2 weeks on the index. So, definitely not the right time to buy at current levels. I won't suggest to exit. Maybe you can hold on. I mean, this is just the first day of correction. If we see a follow-up correction on Monday, then definitely we can book some profits as an investor, but not right time to buy. Of course, today is not right time to buy for traders or investors.
Okay, fair point. The way IT is performing, what do you really sense here, Kush? I mean, it has been on a bounce, showing us that upward trend for the last few days now. And, earnings came in largely in line, but nothing extraordinary that was reported in the earnings that have come in for either of the big four companies from the IT pack or one or two or from the mid-cap space that have reported as well. What do you think is behind this move? Do you think there was extreme pessimism in IT and that's why because things are not as bad in the commentary and therefore there is a recovery of sorts? And what does it mean for an opportunity for retail investors in the IT space?
So for IT space, I am still a little bit worried. Definitely, we have seen a good bounce back because we were oversold. Valuation-wise, many stocks were looking cheap. But I think commentary is not. I mean, it's not as confident as it was in say 2024. But I think one should be not be overweight on IT stocks. I would invest in IT as a long-term investor, but just 10 to 20% at current levels. Maybe I see a sideways momentum on IT stocks. I believe rupee strengthening or dollar weakening is going to hurt the IT industry.
Okay. What's your choices when it comes to IT? Any key stocks that are still better off than the others?
Yes, definitely. As a new investor, I believe I'm focusing on new age IT stocks. So, always I have been recommending Policy Bazaar. I think, Policy Bazaar is a good stock for two reasons. One is insurance. Awareness of insurance has been on rise since post-COVID. And first name, brand positioning of Policy Bazaar is, great. So I would go with Policy Bazaar, PB FinTech, Zomato, which is eternal, and then Swiggy. So these three stocks, new age IT stocks, I would recommend to buy on dips.
But nothing from the traditional outsourcing software companies, TCS, Infosys, HCL Tech, or a Wipro, maybe even a Tech Mahindra, LTI Mindtree, nothing from this basket.
No, I mean, not as a fresh investment because I'm not saying that they're negative. I mean, they will give good returns. That would be, on an average 8 to 10%. But if you are looking for a multi-bagger stock for next 5 years, then new age IT stocks would give them. I mean, 10 years back or 15 years back, these stocks, traditional stocks, who have invested before a decade, they have made multiple because, corporate actions have been good. But I think fresh positions should always be made in new age IT stocks. You should trust the vision.
Okay. Let's discuss also one more space, and that's the auto space. We'll start off by talking about Maruti Suzuki viewers. It's reported its numbers about an hour or so back. We have seen a 1% year on year drop in its consolidated net profit at 3,911 crores. Although it was slightly higher than the street estimates, we have seen a total revenue of 40,920 crores. That's up by 6.5% from last year, same quarter, and wherein we have seen the sales of the products revenue come in at 38,842 crores of the entire total revenue that has been reported. Profit after tax has grown about 5% sequentially. Revenue has grown about 5.6% sequentially. There is a final dividend of 135 rupees per share also that the company has announced thereof. But there has been some amount of decline after the earnings. 11,737 is the level at which Maruti is trading at right now. What's the suggestion that you have here, Kush?
Definitely for auto sector, I believe margins are going to improve in coming quarters because lower commodity prices, especially aluminum, copper. If you look at they are in a good correction. So definitely raw material prices are going to go down. But on the other side, I feel sales will be impacted. I see a slowdown in economy. Definitely, we have seen a good rally on auto stocks in recent past, but I won't be investing at current level in any auto stocks, especially PV, because in last 5 years after post COVID, we have seen a good surge. I think now everyone has say one or two cars. Now I won't buy a third one right now. So metro city sales are going to be in a deep crash, and if Tesla is coming, definitely our companies are going to get a hit.
Okay, got that. But beyond Maruti, also in the auto space or auto ancillaries, is there something that appeals to you at this point?
No, no, no. I'm still waiting for a week or so. I mean, Tata Motors was looking good
Yeah.
yesterday, but I mean, it might be a shortcoming. So yes, if you are holding for a long-term investment, I don't recommend to exit or book loss. But
Okay.
fresh buying is not recommended.
Fresh buying is not recommended. Understood that. Let's look at some of the other earnings that have come in apart from Maruti. We have from the banking space, especially PSU banks. Bank of Maharashtra has declared its earnings. Net profit is up by 23%. 1.5 rupee of a dividend that has been announced. Gross NPA has improved to 1.74%. Net NPA has improved to 0.18% as well. And what we have seen is that the Q4 profit for The company has risen by a 22.6 odd percent, and the net interest income has seen an uptick of 20.6% as well. What we are also noticing is for the NII, that's also improved by 20.6% as well. So on all accounts, there is some kind of an improvement of Bank of Maharashtra. How would you look at this counter within the PSU banks? And off late, we were seeing some kind of a recovery on the PSU banking space. How are you looking at that too?
Oh, definitely, the rally was it was a dream rally on PSU banks, especially SBI, Canara Bank, POB. But I believe at current levels, I would exit and book profits. The way they have corrected in the morning with heavy volumes, I believe, today's DI numbers is what I am looking at, because, was the largest buyer of PSU stocks in last 3 years. So if they are exiting at current levels, definitely I'm not seeing any much momentum coming in near future. So they are good at a long-term perspective, but if you are a medium-term investor, if you are invested for 6 to 8 months, and if you are getting good amount of profits in PSU banks, I would suggest to exit today. Maybe we'll review it one day, but please book profits today.
Okay, fair point. We are actually going to be keeping an eye out on that too. Let's also look at some other pockets that are buzzing. Okay, SBI Life post earnings. It's been the top performer today. Let's take Kush's view there. Kush, SBI Life. Of course, we saw it go up almost 10% odd, but it slipped because the markets itself came down a bit. Your suggestion on SBI Life as of now?
Definitely, I'm super bullish on insurance segment for next 10 years. I mean, I think, being in, I am also a insurance agent. I know it was very hard to sell in at least in Ahmedabad and Gujarat area, term plan and medical insurance before 2020. But now it's very easy as I see it. People are coming and asking me कि term plan लेना है क्या करना पड़ेगा. So the thinking is changing in society, but still I suggest stay with the distributor. So policy buzzer is what I suggest, because we don't know, everyone will get share of market. So margins are getting thinner and thinner for insurance company, but I am sure distributors will make money because they can sell either SB or either ICICI. So PB fintech is what I will buy on dips. Right time, it's in correction. Start by PB fintech. 1200 can be a long term stop loss. In 10 years, this can be a multi bagger stock.
Okay, got that. Let's also look at some of the other pockets then, which are buzzing in trade. In the FNO space, apart from SBI Life, IT names like Emphasis post earnings is buzzing. Persistent is also another one. Within the large caps, apart from the IT stocks, Ultratech Cement is also buzzing. What have you assessed on Ultratech Cement's push off late? The fresh move that's coming in, is it sustainable?
Definitely, all cement stocks have given a good breakout. Ultratech was in consolidation phase on weekly chart for almost 5 to 6 months. I mean, we were not able to
Yes,
sustain about 12,000. So
absolutely.
we are sustaining about 12,000. That's a fair point. But after today's momentum, I think we should wait for a week. Don't get carried away by going long. I just talking about a trader's point of view. But yes, investment point of view, nothing to worry.
Okay, let's look at some of the other stocks that are buzzing. We have in the Nifty 500 basket some interesting names that are moving up. Butterfly Gandhimati Appliances is up 13%. After a long haul, you are seeing this stock at this level, and such a smart move on an intraday levels. Lotus Eye Hospitals is up by about 9.5%. Thyrocare Technologies is another one, 7% up. You also have Restaurant Brands Asia, about 5.5% higher. Sterlite Technologies is up. Sadbhav Engineering, BGR Energy Systems, Kesoram Industries. These are all the stocks that are buzzing upwards of 5%, 10%, like that. All these stocks are buzzing in Nifty 500. Anything that catches your attention in these names, Kush?
Definitely, they are catching my attention. They are even popping out as on my software as a breakouts. But Sakshi, looking at the market index, recommending someone at this
Yeah.
mid cap is little bit risky. So yes, of course, I will Sadbhav Engineering and Kesharam Industries are on my watch list for investment. Definitely, but not today.
Not today. Okay. Earnings continue. Atul Limited has reported its numbers for fourth quarter. The company has reported a remarkable 120% year on year increase in the net profit. So it has jumped to 130% crores from 59 crores in the same period last year. So double of the net profit that we have seen from the company, and that's why a 3% uptick. This was supported by a 20% surge in revenue also. EBITDA also saw a robust growth of 51% odd. And it's a chemical company, remember, and its margins have also improved from 12.2% to 15.4% as well. That's how the stock has moved up in trade, 6418 for Atul Limited. Um, Anything on the charts here that one should know, Kush?
Yeah, definitely. Atul Limited, SRF, both are looking good. This sector will benefit from, trade war. If at all, US is buying from China, so maybe they are the exporters, so they will benefit it. So chart is also looking good. So for Atul Limited, stop loss is around 5950. Target on the upside, first target is 7,000, which is 200-day average, above which we will review it and then uh, give new targets. But as of now, as an investment, definitely you can go ahead with Atul Limited.
Okay. One more earnings I will mark, and that is Dr. Lal Path Labs, the diagnostic services provider. It's also reported an 81.4% surge in the fourth quarter profit. It's exceeded analyst estimates, and it's fueled by robust domestic volumes, expanding network reach, improved operational efficiency as well. So the consolidated net profit for the quarter has come into 155 crores versus 85 crores earlier. So you did see that volume based buying come in over the last few minutes when the move happened after the earnings. Now the profit margin has improved to 25.8% versus last year same quarter of 15.6%. So huge gap there as well. Then revenue from operations has grown by 10.5% year on year to 603 crores. We have also seen the testing volumes and expanding of the footprint also, especially in tier 3 and tier 4 towns. For the company, EBITDA margins have also improved to 28%. Strong move there. In the last few days, I think it was Divis Laboratories that was catching the attention of a lot of investors and analysts. Now, after the earnings, Dr. Lal Path Labs, is it looking any better, or still would you go with the Divis Lab?
Oh, definitely. If you're asking me for investment advice, actually, my general view always for pharma sector is to go for a mutual fund, pharma thematic fund. So Pharma thematic fund is what I suggest. The reason is, you never know which hospitals or which virus will get activated, whose sales will go up. It's very difficult to predict. So personally, I never recommend investing direct equity in pharma stocks. Because if you remember Walcott, it was a hero once upon a time. Now no one talks about Walcott. Engineer Lifecare 2010 to 2020 gave so I mean it's very difficult to trust pharma stocks. So I would rather suggest to invest in pharma thematic funds.
Okay, got that. That's as far as the space is concerned. Let's also look at some of the other aspects. Metals, for instance, how would you look at that, Kush?
Definitely, metal stocks are directly related to trade war, but I think pricing are going down, so that's a good thing because raw material prices are going down, sales will improve. So Hindalco and Tata Steel are the two stocks which have initiated buy call for investment on every dip. Uh, Hindalco 600 is your stop loss for 2 to 3 months. Target on the upside are 740. So definitely you can invest in Hindalco.
Let's look at a few stocks which are trading at 52-week high today. Anupan Rasayan India. It's mildly up, but it's at a 52-week high. Ultratech Cement we marked, that's a 52-week high. Choice International, 52-week high. These are some of the stocks that are trading higher today. Let's also look at, for instance, probably the stocks with top volumes that we are seeing, most active by volume. You are actually looking at those which are trending downwards with volume. Vodafone, Yes Bank, Suzlon, Reliance Power, IEX, Ola Electric. huge volumes, but on the downside though. Let's also look at the names which are hovering again 52-week high. There are some more names, you know. There is a Naveen Fluorine, there is a BSC, there is UPL. So I think this chemicals basket, fertilizers, chemicals basket is actually looking good. Kush, are you looking at this theme at all?
Yes, as we discussed about Atul Limited, I think
Yeah.
trade war is going to benefit chemical sector, and yes, fertilizer, because we are expecting a good monsoon. So I think fertilizer sector is generally in May series, these are the stocks which are active. So look, keep a watch on Chambal fertilizer. I think that stock is high momentum, high beta. So UPL is good, but for a trader, I think Chambal fertilizer is a stock. 645, 650 is a good support zone. That can be a stop loss. Post monsoon, so around July, we can expect 740, 750 level.
Okay, got that. So that's the view. We are down by 238 points on the Nifty. 24,000 again is a risk of being taken out. 322 right now. Kush, any STBT, BTST trades that you will be comfortable with sharing?
Looking at the geopolitical tension, I would suggest to buy 24,500 put option and hedge your position as an investor or a trader just for a weekend. Maybe if anything goes wrong, you may get some cushion on Monday if at all we go gap down. No trading view, just for hedging your portfolio. 24,500 put option on Nifty.
Okay, noted that. Let's look at some of the other stocks also that are probably in focus. You know, I wanted to discuss the capital market story with you. BSEI marked, but other spaces are also buzzing. What is your favorite stock within the capital market story?
So for investment, definitely BSC Limited and CDSL. I love these two stocks. On every dip, you stand on to this portfolio for multi-bagging chances. Again, I want to go, company specific like Angel One or Motilal or any companies because I feel now it's easy to switch on account. So traders are going from one app to another app. So volumes and margins are shifting. So it's better to be with CDSL. BSC and also CAMS. I mean, these three stocks are on my portfolio list for long-term investment. I've recommended all my clients to buy on every day.
Buy on every dip, is it? Okay. Definitely. So we'll focus on these two pockets as well. Let's look at one more pocket. Let's look at gold and silver. That's also seeing slight dips right now on MCX. Let's pull up the gold and silver basket at this point in time. This has been the hottest topic of discussion since last few days. Now 95,000 on MCX. It went up past 99,000 on MCX. Remember, just a couple of days ago, there has been a decline happening there on MCX gold viewers. 95,000 on MCX now. So there is some kind of a cool off that's taking place. Let's look at MCX silver. How is that also trading at the current levels? 97,444, slightly higher than the gold prices, but that's also down mildly in trade. But gold has actually slipped today. Kush, would you be looking to buy gold at all these dips? What's the outlook there, and how are you playing the sharp rally in the precious metals?
No, I would suggest to buy silver and sell gold. That is a spread trade we have suggested. So not buying gold at current levels.
Not buying gold at current levels. Buy silver, sell gold is the strategy that Kush recommends on the precious metals as of now. Okay, Kush, 5 minutes to go before we wind down the trade today. But we have started off the May series now as of today. We ended yesterday. With slight losses. Today is the second day when we are seeing some cuts coming in. That's right after 7 days of a move on the higher side. For the May series, where are you going to keep an eye out on? What's going to be the strategy? Help us between Nifty Bank and your overall strategy for the investors sectors as well, if you could mark for May.
So sell banking and buy FMCG. That's what the strategy is. I think if at all we are going down, banking stocks would go down. So one STBT for trading call which I initiated is HDFC Bank. You can sell HDFC Bank future at current levels. 1940 can be a stop loss. Target around 8040.
Okay, got that. Fair point. Thank you so much, Tenkush, for being with us on the show, helping us navigate through the entire move today. Again, it's been very, very choppy. If you see, we're again kind of slipping, but we are going to be looking at whether this 24,000 gets tested towards the closing of the day. 4 minutes to go for the markets to shut shop. 2 days of weakness in the markets is what we've noticed after those 7 days of a move on the higher side. But the problem is that we end, the trade for the week today. Even though because of the gains that we saw in the first 3 days of the week, which were sharp, we are still holding up for the week, about a percent odd or so, despite the kind of weakness that has come in. We've tested that 24,000 yet again, 250 points lower in trade, so we are again giving up. That's what I'm saying. The problem is that the weekend, and we do not know how things will shape up. Just when the things started to improve on the global front, on the trade front between US, China, things started to soften out. Geopolitical tensions have emerged back home, and we do not know how things will shape up. We have to be very, very open with anything, any news flow coming in tonight, tomorrow, day after, from either side, from India and from Pakistan as well. And this will be a very, very close watch, and which is why you are actually seeing the markets under pressure, seeing some sentiments being tested at this point in time. If things improve on the weekend in any account, then probably things could inch up. But most of the experts do believe that things are in a very dicey situation right now. You need to have a very cautious approach. Even Mitesh in the morning did say next 15 days, very difficult to say. So be very, very careful. What Kush has also marked out for you. Sell banking, go for safer havens, go for defensives like FMCG. He's had an STBT on HDFC Bank. That was one of the performers of the recent run up in the markets that we actually saw. So let's start to wind down the markets. 250 points of a loss, 24,000 is what we have as a level. Remember, we have seen 24, 400, 24, 300, 24, 200 in the trade even today. But all of that is being tested. IT earnings and post that, we have seen sharp pessimism being bought into for the IT space, since this is again linked to what's happening in the US. TCS, Infosys, Tech Mahindra up and about in trade. SBI Life, Ultratech Cement, top movers on the Nifty. But barring what, just about 7 or 8 odd names which are higher as far as the Nifty is concerned on trade today. We have ICICI Bank flat in trade, Reliance flat in trade, Grasim 0.1% higher, HUL, Ultratech Cement, Infosys, TCS, Tech Mahindra, SBI Life. Those are the only names on the Nifty that end with gains. Shriram Finance now down by 8%. That's the top loser in trade today. When we look at other names, Adani stocks, they are down in trade. Let's also look at, one second, let me just quickly see if there is any kind of a news flow on right now. Trent, Axis Bank, Eternal 3.5% lower in trade. Even though Kush is betting big on it because he's a long-term investor on Zomato, he's betting on it, but Eternal is 228. Levels is what we can see, 3.5% lower. Almost 3% of a cut on PSU stocks, oil and gas stocks, power stocks, all of them bleeding in trade today. SBI Life, Emphasis, Coforge, Persistent Systems, FNO top movers. On the downside, Angel One, 10% lower. CDSL 10% lower. So on these dips is what Kush is asking everybody to buy these stocks. Irida down 10%. L&T Finance, Tata Elxsi, Tata Technologies, Titagarh Rail. All of them sharp lowers, moves can actually be seen. SBI Cards post earnings, Oberoi Realty, Shriram Transport Finance, all of these stocks are actually down. Real estate, media stocks are media indices. These are the two indices which are sharp declines can be seen. 3.5% losses. Mid and small caps nearly 2.7% of a cut. PSU banks 2.5% lower. Pharma, consumer durables, autos, private banks, oil and gas, all of them down in trade. So that's how the the kind of levels that we have seen for the markets today. We shut shop, it's 331, 254 points lower, below 24,000 levels on the markets. We'll leave you at that, viewers, but do stay tuned, as beyond the markets also, we will continue to get you all the news and the buzz from the world of business. So stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. Our focus will be on Persistent Systems earnings. What we've seen from the company is that their revenue has inched up nearly 6% at 3,242 odd crores. We've also seen the EBIT has improved by 10.9% to 505 crores this time around. EBIT margins have also come in at 15.6% versus 14.9%. So there is an expansion again. And the net profit has also seen a surge of over 6% at 396 odd crore rupees. So across the board, there is a strong performance that